welcome to Taking Stock. This is the show where we take stock of the week gone by and we tell you all that you can expect in the week to come. I'm Sonia Shenoy and with me is Anuj Singhal. Anuj, it's been a rather choppy week for the market, down about 1.2%. But by the end of the week, you get a feeling that both the bulls and the bears put up a tough fight this week.
Oh, yes, they did. And I tell you something, the key takeaway for me was the resilience of Indian market, in the face of bad global cues. Tell you something, look at these graphics. The Sensex is down 1.5% this week. MSCI Emerging Market Index itself is down about 4.5%. You had a Nikkei which was down about 8.5% this week. Hang Seng was down 4.5% this week. Brazil was down about 5% this week, and Russia was down 6% this week. So as that bar will explain, Sonia, we were clearly the best performing market. And I'll tell you some more things which happened this week. One, the market got leadership from HDFC. That was a stock which went up 7% this week. ICICI Bank derated, though on Friday it made a bit of a comeback, but that stock was down about 8%. And thus, this is one thing that we kept talking about through the week, and on Friday in particular, it was a week of bottom-up stock picking. Just two examples. The biggest stock of the week was V-Guard, which was up 34% for the week, and you had an ABG Shipyard, which was down 32% for the week. Tells you a lot about the market texture, resilience, and stock specific.
Oh yes, in fact, joining us on the show today, we have Tirthankar Patnaik of Mizuho Bank and Ashwani Gujral of ashwanigujral.com to tell us what they are expecting from the markets on the technicals and on the fundamentals. Gentlemen, thank you for joining us on Taking Stock. Tirthankar, I want to start with you. This week, the market couldn't really make up its mind as to which direction it wants to take, but by and large, we've been in an uptrending market. Are you getting a sense that that uptrend could be stalled for a while for the lack of any positive cues?
Well, markets since the recovery in March have been on a global recovery. They have been in line with global peers, be it the S&P 500 or the MSCI World that we track. And, that has been not just restricted to the equity space, but also in major risk assets. So we've had commodities move up, and a number of the emerging market countries are commodity producers. So that has also seen their stocks move up quite sharply. India remains differentiated thanks to its better macro positioning. Growth numbers are better than expected, better than most of the emerging market peers. The inflation and current account deficit, fiscal deficit, these were the issues that were dogging the economy over the last 2 years, have not been really an issue and are not likely to be issues over the next 2 years. So markets are likely to remain differentiated, and from a near-term perspective, what would happen is global macro triggers will continue to rule the roost as earnings season at the moment remains fairly good. But as we get into the earnings season, deeper into the earnings season, you might see much more sobering numbers come in. So my sense is that numbers in Indian markets should look better than EM peers. The kind of differentiatedness, the kind of difference we saw in this week should sort of continue.
Okay, Tirthankar, but let's take it down to individual sectors. Within banks, which is the largest sector, we again had this bipolar nature. The likes of ICICI and Axis are underperforming, while IndusInd, Kotak, HDFC Bank have started to outperform. Do you think this bipolar nature is going to continue, this dichotomy that we have seen?
Until the asset quality issues that are dogging the Indian economy are sorted, we are likely to see a continued separation between banks in terms of their asset quality. And what we have seen this week and the previous weeks has been clearly an illustrative example in this case. So private banks, and specifically the subset of private banks, without taking any names, that have had reasonably better asset quality numbers, are likely to continue performing. So from a sector perspective, you've had the PSU bank space that's looking at roughly 5.5 to 6% NPAs over the next 4 to 5 quarters, 4 to 6 quarters, and you have private banks specifically that have around 1.5 to 2% or even less kind of NPAs, and these are banks that have been continually performing, and we see no change in this scenario really over the next 2 quarters.
Okay, well, that's about the banking space, and we are seeing the big movers on your screen itself, names like HDFC on the upside and ICICI Bank on the downside. So it was a pretty polarized picture that we saw for banks this week. But what about the auto space, Tirthankar? Because we had a really good run in some of the names like Eicher Motors, good numbers coming in from the likes of Hero MotoCorp, etc. Are you bullish on that space, and is there more value there?
We clearly see value in the auto space. The numbers in April have been starting off on a very good wicket. We've had numbers from the largest automaker coming in north of 14%. And we have also seen overall passenger vehicle sales north of 12%. We've seen two-wheeler numbers coming in at over 20%. And part of it can be described thanks to the the marriage season that we have, a short marriage season in North India. But overall, one would expect two-wheeler numbers, tractor numbers to be fairly good in this year, and that will largely be led by a monsoon which is expected to be normal after 2 years of deficient monsoon. One should look at rural wages moving up. Rural wage growth has stagnated. It has come in at just about 3 to 3.5% over the last quarter or so. So we should see rural incomes move up when a favorable monsoon comes in, and that should augur well for the auto space going forward. One should also see the CV space, the MHCV space, that also did fairly well. One should also see the MHCV space doing well, continue to do well going forward.
Okay, Tirthankar, the big talking point this week was Japan, and the fact that we didn't have any additional stimulus from Bank of Japan. In fact, that spooked markets first thing Monday morning. How's the global picture shaping up for you? And do you think we have headwinds from the global markets which should take the market lower, at least in the near term?
The view from the Bank of Japan was that they would remain in line with what their counterparts did at the ECB and the Fed, which was essentially maintaining the monetary policy view that they had since January. So from the Bank of Japan, the market expectation was that given the inimical move in the yen and the Nikkei since January, since the negative interest rate policy started, the market clearly expected Bank of Japan to provide far more stimulus, and a pause there, so to speak, had a very negative impact on the yen. We believe that the Bank of Japan would come in with the further stimulus, probably after another global event, which is again very important for markets, gets out of the way. On June 23rd, we have Britain going in for the referendum to remain in the EU or not. While most of the markets or the odds would essentially believe that Britain will continue to remain in the EU, opinion polls are not really so favorable. So there is a 30 to 40% chance that, at least according to opinion polls, that you might see a negative outcome there. So we believe that from a central banks largely would take this into perspective and then keep their stimulus measures or keep any kind of additional measures until after this event trigger is passed. So yes, we expect Bank of Japan to probably provide more stimulus going forward on the yen. Clearly, they would see the yen, weaker going forward, which should in turn help some of our companies as well. But it will be after this Brexit trigger is passed.
Okay, so finally then, Tirthankar, before we let you go, if you had to, put your finger on the pulse of the market and tell us where you see the Nifty, say, by the end of the year. A lot of forecasts have been flying around. Most of them have not played through. But what's your own expectation by the end of the year? Where do you see the Nifty?
Our sense on the Nifty would be largely determined by where earnings growth is going to land up towards the end of the fiscal. At the moment, consensus earnings are still in the high teens. We are looking at 15 to 17% growth. Our own sense is that just like FY16, FY15, we are likely to see consensus numbers getting downgraded as we go into the subsequent quarters into FY17. We might end up something like 10 to 11% in terms of earnings growth. That should in turn take the market, driven by this earnings growth, to about 8,300 odd levels, I think, by the end of the year. I think that is where we would say that we might end the year with.
8,000 to 8,300 is what you have as far as the overall market trend is concerned for 2016, Tirthankar. But that won't mean too much return from index point of view. I mean, it won't beat really the fixed income by a large margin. individual stocks can still do that. Any particular segments where you think the investors can invest right now to beat this fairly steady 7 to 8% returns?
You're absolutely right. Market returns may not, this will remain a bottom because market, we are in the midst of an extended recovery. We are looking at 7.5% growth for FY17 as well, and probably well into FY18 until capacity utilization improves and gross fixed capital formation improves in the economy. We are not likely to see a full-fledged growth. We are likely to see cost of funds come off and consumption-led recovery. So from that perspective, there will be certain sectors which will do better than the market, but it will be essentially our bottom pickers market. So from a sector perspective, as I said, we like auto. That's a sector that we clearly like. Anything related with the agri sector in the medium term should be fairly good, as the rural sector, as I pointed out, has not been doing well, and a favorable monsoon should do better going forward there.
Okay, well, since we are talking about certain sectors and
of course,
stocks,
private banks are one place which they will continue to.
okay, sure. I was just meaning to ask you about, one of the big stocks of this week, which was HDFC Limited. It's risen almost 10% this week, and we saw some really good profit numbers come in, 40% growth, of course, on expected lines. But do you see a resumption of some of these, heavyweights, the erstwhile favorites, the likes of HDFC, etc.? And does it still offer value now?
I wouldn't want to comment on specific stocks, please.
All right, Tirthankar, thanks a lot for your time today and taking us through what's been an interesting week. Of course, we're taking stock of the week in which the global markets were down quite a bit, but the Indian markets were resilient. So we'll take a break, but as we do that, let's listen into some big market voices that we have heard through the week, and we'll be back with Ashwani Gujral for a technical perspective on the market.
Ready for its next leap. That's my personal opinion. The leap is going to be slow initially, and then it's going to catch speed. And the market is smelling and recognizing that. And I also want to tell you, I have learned from experience in the markets, then when markets take a course, every event which is uncertain is in favor of the course markets have taken. So if the markets have taken a bullish course, you see the range will be good. I feel extremely bullish. I would be very surprised if we retested 7,200, 7,000. Expectations are mellowed. Surely, whatever be my opinion of bullishness, the economy is on upturn. The results are better than expected. And I think the change which the government is making, the real effect is going to come upon us.
No, it's a global problem, and it is just something to be observed. Say like oil price coming down, it's a huge macro factor which you have. It is very important but not knowable. So just leave it on to itself. It's at least positive for the equities. This time, India is arrived. I mean, like everybody is watching it. A lot of commitment. We need to play our cards well, and we are entitled to get, or we will get, good flows in the days come.
Welcome back. You're watching Taking Stock. It was an interesting week because the global markets were almost down and out. A couple of Asian markets were, but our market was resilient. Having said that, it was still a week in which on 4 out of 5 days, you would have made more money by selling the rally than buying the dips. What does that mean for the near-term texture, the medium-term texture, and of course the long-term technical trend of the market? Ashwani Gujral is back with us. Ashwani, hi, good to have you on the show. Your call has been that this is a market which is going through a near-term correction, but is in a larger trend, a larger uptrend. So what are the key markers to watch out for, not just from the next week's point of view, but from someone who wants to take a fresh positional trade right now?
Well, clearly we've seen this week that our markets have outperformed, which means they haven't fallen as much as global markets. So clearly, see, markets go through deep correction when, almost everybody is in the market. Right now, there's so much skepticism, denial. I mean, who's in the market? So we first need to have an overbought market in order to correct sharply. See, this will become some sort of a rule that each time we correct to 20 DMA, you buy and you make money. That will happen, once, 2 or 3 times the market reverses from here. But that is still to happen. And overall, you could have 50, 100 points in sympathy with global markets. But more or less, it appears that the market is finding key support at 7,700. Maybe we could do 76, but not much more than that. Every day, the bet starts from, 4 decliners to 1 advancer. And by the time we end, it's almost 1:1. So broader market is also still holding its fabric fairly well. And large cap, some leadership is emerging from HDFC, etc. So chances are that at some point next week, possibly we could end this correction.
Okay, so at some point next week, the correction could end. On that optimistic note, Ashwani, if you had to pick out a couple of stocks to trade next week, what would be on your buy list now?
See, last week we had spoken of, rural themes. This week, financials have done very well. So I have 3 financials which are from different categories. First one is Bajaj Finance, which has completed its correction. So clearly ready for a positional buy. Next intermediate rally could carry it up all the way up to 8,500. L&T Finance and Holding, which came out with decent results. I think in the next rally, probably 3 to 6 months type of target could be 120, 125. And finally, HDFC, which has also emerged from some sort of a bear market. And the next target here could be closer to 1340. Obviously, it's a multi-week style target. So anybody who enters, say, next week should wait for some time before these targets are reached.
Ashwani, the problem this week was also IT stocks. Once when Infosys came out with numbers, hit all-time highs, we thought we had a leadership stock and, new lifetime highs would be the pattern. That hasn't happened. Technically, what's next for the big stocks like Infosys and TCS?
See, IT is underperforming ever since this rally started. And there was only one stock, which is Infosys, which was trying to outperform. I think given the way HCL, TCS, etc. are moving, I think it'll be too much to expect IT to outperform from here. But possibly even as a market performer, chances are there is some hope of upside. Each time you see global markets come down, IT index is the one that gets impacted the most. Once NASDAQ recovers, possibly if not outperform, IT has scope to gain from here. The other worrying thing on the market is probably Reliance. It's getting to its 200-day moving average. So one of these guys, IT or Reliance, have to push their weight because banks anyway are being weighed down by ICICI. So let's see next week one of these sectors should pick up.
Okay, but Ashwani, so that's the near-term trend of the market. Now, once this correction is over, do you think the Nifty would take out this 7980 zone where it struggled? And what are the next targets on the way up?
See, we've remained below the 200-day moving average for the last whole year, since August of last year. And I think now the market is getting ready to get past the 200-day moving average. Now, maybe it's just about waiting for the first news on monsoon, because once that happens, clearly, a lot of bulls will come into the market, a lot of bears will turn bullish once the 200-day moving average is sustained. So maybe it needs that kind of trigger. But I think if the monsoon is in place, 9,000 should happen within this year. And, it just needs a global risk on. If we are already outperforming, once global markets start to pick up, we could actually move much better than the global markets themselves.
Okay, Ashwani, you have a good weekend. We will touch base with you once again next week. Thanks for joining us. That's the word coming in on the technicals. But what are the key events that the markets will be watching out for in the week ahead? Agam is here with a quick preview. Agam.
There's going to be yet another action pack coming up ahead. Starting off with Monday, we will have Thyrocare list as one of the most important IPOs we have had recently. Other than that, in terms of earnings, we will also have HUL come out with its quarterly earnings. And in terms of global news, we'll also have the Panama Papers be released to the public. So we'll be keeping an eye on that one. Moving on to Tuesday, in terms of earnings, we have the Entertainment as well as Kaveri Seed Company releasing their earnings. But globally, we also have China economic data, where we will have the CPI and PPI possibly move the global markets. Moving on to Wednesday 11th, in terms of earnings, we are keeping an eye on Asian Paints, Kotak Mahindra Bank from the Nifty, and Apollo Tyres, and another important mid-cap company coming out with earnings. We will also have the court orders framing charges against Naveen Jindal and others. So JSPL will be in focus, along with crude derivatives inventories in the US, which will also be released, which could have an impact on crude and its movements. Coming on to Thursday 12th, in terms of earnings, we're keeping an eye on Dr. Reddy's, Glenmark Pharma and Nestle. We will also have the MSCI changes announced, which will be announced on that day and which will be in effect on the 1st of June. And other than that, of course, the US unemployment claims will be something that will move the US markets. Come Friday the 13th, other than the fact that it is Friday the 13th, we will also have earnings from mid-caps such as Kerala Healthcare, United Breweries and Indraprastha Gas. And that's what we have in terms of a lot of events that we can watch out for going to next week.
Okay, well, we will prepare ourselves for Friday the 13th, but we will enjoy our weekend before that. Thanks, Agam, for joining us. And thank you guys for watching. Enjoy your weekend. We'll see you bright and early on Monday.